The primary market action is as hot as ever. Bajaj Housing Finance's much-awaited 6,560 crore IPO opens for subscription today. The issue includes an offer for sale of 3,000 crore rupees and a fresh issue of 3,560 crore rupees. Bajaj Housing Finance has also raised 1,758 crore rupees via anchor book ahead of the IPO. Well, let's talk about what Bajaj Housing wants to do in terms of growth rates, because that will be relevant for you as a potential investor. Atul Jain is Managing Director at the company. He's with us to take some questions. Atul, good morning. Great to have you with us here. Thank you for your time. Prashant this side. Housing finance is the sweet sector. Long runway for growth, unending demand as far as the eye can see. I mean, Bajaj Housing comes from a stable which is really very highly rated, so cost of funds is not a problem. So give us a few numbers, Atul. What should we expect in terms of AUM growth at Bajaj Housing for the next many years? What should what's the ideal net interest margin for Bajaj Housing going to be from here on? Go on.
Prashant, I think you have got me off the wrong start. You are fully aware during the IPO process, we cannot talk about projections. So I'll have to take excuse on this question, because what we can refer is what we have delivered till today. Prashant, what we have been growing at the rate of, in last 3 years, at the rate of a 31% AUM. Past growth is not a reflection for the future growth. But the housing market, as you called out, is very big. The market is very big, and compared to while our absolute size, which is a 91,000 crore assets as of 31st March and a 97,000 crore assets as of a 30th of June, look in absolute sense reasonably big, but compared to the market size, I think we are still very small. So all segments of the market, whether it is, because we are in mortgage in all segments of the market, whether it's a home loan, loan against property, lease rental discounting, or a construction finance, I think all segments of the market have a clear runway and a very large runway, given country is growing, given housing demand is growing, given mortgage segment itself has been growing at the rate of a 12 to 15% across industry. So we believe, given our relative size, we have a reasonable path and a highway to grow. We can't talk about specifics, Prashant.
So on a 1 lakh crore book, can you continue with the historical growth rate? Now, I'm not putting any numbers out, but you said we could talk about what you've done.
So our attempt will always be to grow faster than the industry. That's what, Prashant, we can say. Yes, of course, as the size grows, what you are referring is the difficulty to grow at the similar percentages. However, we feel, again, to in a way repeating what I said, that given our relative size compared to the market being lower, we feel that we have a clear highway in front of us.
I remember our conversation, Atul. Hi, this is Reema here. You told me that the housing loan market itself is 30 lakh crore plus. The loan against property market is 10 lakh crore plus. And projections by CRISIL suggest that this market is growing at about 13 to 15%, at least for the next 3 to 4 years. So for you, per se, the developer finance book has been growing faster. Is that something that will continue for the next 2 to 3 years? I'm sure you have that visibility. So in terms of the products that you offer, for the next 2 to 3 years, which ones are growing faster? Where will we see perhaps a little bit of slowdown?
So Reema, what we are, since we are registered as a housing finance company, there is a regulatory construct on our asset composition, which is first regulatory construct is 60% of our total assets have to be residential and 50% have to be home loan. So construction finance is a part of the non-home loan segment, because as a regulatory construct, only 50% of the assets can be which are non-home loan. So construction finance, lease rental discounting, and loan against property, we take a view depending upon, at a point of a time in the market, what is the return versus risk in that construct. If the market had been growing faster for construction finance in the last 2 years, we have grown faster. If the market grows in future in other segment faster, and we believe the opportunity to grow there and the risk return ratios are better, there will grow. For construction finance, we also have a requirement to keep on working in the way we work, because it acts as a funnel for home loan, which is our retail business, because it helps us build the relationships in the market, because developers are the primary sales points, and if we have a relationship with them, it helps us to be present and their counter for home loan. So again, a clear pathway, I think, depending on the market situation, and as market grows in construction finance, their housing boom, what has been there currently, boom remains and the demand remains, happy to keep on growing.
Not happy to keep on growing. You've spoken about, a reasonable path / highway to grow. So we'll while not pin you down to numbers because you can't obviously project them, the last 3 years, your loans have compounded at a little over 30%. Just wanted to know, when you say it's a highway, is it, compounding at 25 to 30% or probably higher now that you get a little more money into your kitty as well? Just a rough range over a medium-term period that you're aspiring to grow at.
Again, regret we cannot be specifics in terms of a range. Like I said, that highway to growth is there. And just to add the point, money raising is not going to change the highway to growth because we are well capitalized. So the capital had been available as a private company as well as a 100% subsidiary of Bajaj Finance. We had been raising capital as and when required. This is an effort to diversify the source of capital. We had been raising money on the lending side separately from the parent company. But now this is an opportunity because having reached a particular size, we felt there is a time for us to even diversify the sources of capital. That is why this is a diversification of a capital source, not in a way creating an extra width for growth. The growth which would have happened as a private company would continue to happen as a public company as well.
So with this being diversified, do you getting capital from other sources as well? What does that then do to your margins? Because, I mean, if, the growth side is intact, no problem. It is the liability side which, you are diversifying right now. What happens to your margins? Do you have any targets on improvement out here?
No impact on margins from the capital raise because, of course, for some time when there is a capital excess, their margins expand because of, your leverage ratios goes down. But on the borrowing side, since we already enjoy the highest credit rating in the country from the credit rating institutions, and lenders have been having the confidence on the parentage and our track record, we had been borrowing at a quite competitive pricing. So we don't expect compression in the cost of borrowing by public issue or by going public, or expansion in the margin or a contraction in the margin. Margins are not getting impacted by our raising money through public. The only impact, which is the impact of an excess of capital for a period of time, that expands margin to a certain extent.
Okay, all right, we'll leave it there. Atul, appreciate you joining us. Good luck with the issue. And thank you very much for being with us here. And we'll hope we can talk specific numbers in terms of guidance, etc. Post-listing, on the day of the listing, which I'm sure is going to be a great one. So that is Bajaj Housing Finance with some perspective.